start with a brief introduction before we get into the material for today. My name is Eric Fitzgerald. I'm the Director of Acquisitions for PassiveInvesting.com. Been with the firm about 2.5 years. 2.5 years now. Been fortunate to have led about $1.2 billion worth of multifamily transactions in that time. From Pennsylvania, originally Northeastern Pennsylvania, moved down here to Charlotte in 2019. Have a background, started my career at a company called Morgan Properties near Philadelphia, Pennsylvania. Then moved down to Charlotte and worked as an analyst at a multifamily firm, and then as an associate for a family office doing B and C class acquisitions, and met Dan and Danny back in 2019 when I first moved down here, and kind of built a relationship with them. Actually found Dan through Multifamily Investor Nation, so kind of a cool full circle every time I do these webinars. And started working with the company, like I said, about 2021, beginning of 2021. So today we're going to be talking about broker relations. We've got about a half hour for today's webinar, maybe a little bit less, but we're going to get through a lot of kind of what we do as a company, what I do personally to build those relationships and get strong deals coming into the door. And then I want this to be very, collaborative. So if there's questions as I'm talking, feel free to put it down in the chat box or the Q&A. I'll be checking both areas and happy to, answer any specific questions or help anyone out on their specific journey in terms of where they're at now. So broker relations as a whole is probably one of the most important things that we do and that I do on our acquisition side of the business. One thing, and I'll just get right into it. One thing specifically that I've found to be really, really beneficial for us, even assuming that you don't have this big portfolio behind you, maybe you're newer, reaching out to a broker, and it's maybe your first introduction to them. One thing that we've had a lot of success with making new relationships with is creating a PDF that has our criteria, our company, background about our company, background about ourselves, little bios, and really outlining our criteria, A to Z, like really, really specifically. And as well as if you have a current portfolio, putting your current portfolio in there, even if you have professional experience, like you were an engineer or you were in business, putting something in there about yourself is also important. But we found a lot of success by doing that. People will review this PDF, and it's usually a follow-up to a call. So you'll call them, be like, "Hello, my name is Eric Fitzgerald. I'm the head of acquisitions for PassiveInvesting.com. Here's our portfolio. Here's what we're based out of. Here's what we're looking for. I'll follow this conversation up with an email, so you have it. And here's this nice clean PDF with our logo and pictures of our deals and all this kind of stuff." So we've done really well with that PDF, and that could be as simple as using a service called Canva, which I've done before in the past. It's a free service you can kind of create PDFs on. We've got a really good marketing department that luckily we don't have to go do that, and they look 10 times better than me fooling around in Canva. But at least get some, version 1 is better than version none, is what Dan always says. So just get something on a PDF to share to brokers, and make sure it has what you're looking for on there. And brokers love that, because now they know what to send you, what not to send you, and you just kind of continue building the relationship from there. After that PDF, what's really important as kind of the next step is giving quick feedback to whatever they're sending you. So if they send you a deal that's like completely out of the range of the PDF that you sent or the phone conversation that you had with them, that's typically a very quick conversation that I'll have with a broker of like, "Hey, being nice about it, obviously, but we just had this conversation, sent over the PDF. This is a 1970 build, asset in New York City, when we're looking at Class A assets in the Southeast. So it just doesn't fit." But giving quick feedback to stuff like that is important. Maybe they're just trying to test you out and just send you a bunch of stuff, see how your feedback is, see how quickly you respond. So I'd say, the next step after that PDF is making sure you're giving effective and quick feedback to whatever they're sending you. Happy to, again, if there's questions, I saw Joshua just introduce himself in there. That's awesome. So please, put down questions in the Q&A box or the chat box as you think of them, and want to make this kind of a collaboration with everyone in here. So first step is the broker PDF. Make sure you have something nice and clean with all your criteria. Second step is giving concrete and quick feedback to whatever they're sending you. So that's typically, sometimes the first couple of deals are they're trying to vet you out, and they're probably not the best deals. You're not going to get the best deals from a brand new relationship, but they're kind of probably waiting to see how you respond, what kinds of things you're saying on the phone. And that's another thing, is to make sure you're getting educated. So all of you here are doing the exact right thing in terms of getting educated before you have these conversations with the broker. So when they ask you, what cap rate are you looking at for the, this vintage of asset, or, what do you think about this submarket or this market? You should have done your research already. You should speak intelligently about your investment thesis, just kind of, you don't have to sell them on anything, but just genuinely and truthfully be educated, and that will come out in natural conversations. You don't have to be anything that you're not, if you actually are educated and you actually have put in the work to make smart investment decisions in the multifamily space. So that's very important. So again, broker PDF, getting quick feedback, being knowledgeable about the areas. This is a constant thing as far as communication with the brokers. So what we've kind of built out is a system inside of our deal path, kind of deal CRM, where we keep all of our deals. Every week or 2 weeks, it'll ping myself or somebody on our multifamily acquisitions team to reach out to the broker if we haven't talked to them in that week or 2 week span. And so we'll set, depending on the priority of the contact, if it's, somebody in the Southeast in Charlotte that we work with all the time, it's probably more natural. Like, I just talk to those people, as much as I can, and it's really kind of more natural. But there's new relationships that you're trying to target. It's important to have some kind of system to where you're not, making sure you're not talking to them. You don't talk to them for a month or two, and then you call them up because they have this awesome deal, and they're like, "Who are you again?" The relationship just isn't there. Ted has a question in there. Thank you, Ted. Is it bad to be so narrow focused? And he has an example in there: 1980 and newer, value add, 60 to 100 units, class BC, 90-minute radius from the city, not low-income housing tax credit. So actually, I would say it is not bad to be narrow focused, especially when you're working with brokers. Now, you don't want to be more narrow than your capabilities are. So when we're able to do, $100 million deals, I don't want to say, 80 to $100 million deals just because we can do that. I want to say it's probably 20 or $30 million up into the $100 million range. So that's still a large range, but that's because we have the capabilities to do that. But I would say, especially when you're starting out, it's probably a good thing to be narrow focused, and just like, I would say, even just focus in on one market when you're getting started and learn everything about that market, make the best relationships with those brokers in that market, even like full lists of the properties on services like Reonomy or CoStar, and go through the list and identify, like, hey, these are my top 50 deals in my market that I would love to own. They fit my criteria, they fit my location. And once you have a really good relationship set up with a broker, send that list to them and just be like, hey, can you drum up any of these deals? And we've done that before, and we've gotten, deals, doing it that way. I'd say as you're growing, you probably just naturally become a little bit more general, because then you're looking at more markets. You're probably looking at larger deal sizes, looking at maybe different vintages and things like that. But especially as you're getting started, I think it is a good thing to be, extremely focused on the kinds of deals that work for you and what you're looking for now. So I hope that answers your question there, Ted. So let's see what else on Brokerly. We have about 15 minutes left, so please keep asking questions as you guys are thinking of questions. I think I was talking about our CRM system with how we follow up with brokers, so that will ping us every week, every 2 weeks. And we'll be making sure that we're making consistent interactions with those brokers. We're talking to them all the time. We're giving them feedback every time, pretty much every time a deal comes out that fits our criteria in one of our markets. We're underwriting it within 24 hours of the deal being blasted. We're asking questions, we're calling the broker, we're getting pricing. I mean, we are on top of every single deal that comes out in our markets, and brokers know that. So it's important. JR says, what is a good CRM to get for a newbie? I would say Monday.com. So we use Monday.com for our acquisitions department as overall, up until probably we were at like $400 million of assets. And I believe it is a free service as well. So we use Monday.com very heavily. It's a great service. So that's how we tracked all of our deals. It's how we tracked all of our brokers. And they have templates that you can go in and get set up with, super easy. Now the thing, it may not be free because of all the capabilities that we needed, but I do believe there's a free version that you can use until you need the paid version, which still was not super expensive or anything like that. So Monday.com is a good place to get started there. So yeah, making sure you are, contacting your brokers on a regular basis. What we have done recently is we have a new requirement for our multifamily team and our car wash team actually, is they identify the top 5 brokers that we work with or that we think we will be working with for the quarter. And then every quarter we need to take them out. To some kind of event. So what we've done in the past is we took out, for kind of a closing celebration on a deal, we took out brokers to Las Vegas during the NMHC conference, and we took them race car driving. So that was a lot of fun, and probably a little selfish on our part because we really wanted to do that, but it was a good kind of celebration, for the deal. You build great relationships doing stuff like that. And it doesn't have to be something, extravagant either. It could just be taking them out for lunch, or, if there's car shows here in Charlotte that I'll go to with brokers that we work with. And that's a great way, it's on a weekend, nobody's in work mode. It's just like you're going and looking at some cool cars, and, you can kind of bond that way. So we make it a requirement to make sure we're doing that with our top 5 brokers. And that's the bare minimum. Like, a lot of this stuff happens naturally now at this point. And, we're reaching out to, brokers on a regular basis and scheduling lunches and dinners and coffees and race car driving and all that kind of stuff. We've even played with the idea, and this is not, we haven't done this yet, and we might not do it, but even putting in some kind of bucket of money for a closing, to where we can go and take the brokers to like something really cool, like, pay for a vacation, or like, go to them to a resort and stay there for a couple of days and just do different things like that, and just trying to be creative with that. So that's another important thing. Tony has a question here. Is telling a broker you're looking for a specific investment return range on 10+ units enough info, i.e. 10+ return on 10+ unit apartments? I would say it would be part of the information you would want to tell them. But if you're just saying, you want a 10%+ return on a 10+ unit apartment, they could send you a 12 unit in an absolute war zone that, using broker underwriting, they're getting to a 10+% return. So I'd say it is something that we'll tell brokers, like, hey, we're we're targeting in the low to mid-teens on an IRR basis with some cap rate expansion, and on the cash on cash side, we're looking in the 4 to 6 range or something like that, 5 to 6 range. But that's part of our criteria, and another part would be the vintage, the locations, the quality of the asset. So just making sure you're not kind of pigeonholing yourself into something that they can use their broker underwriting magic and pencil out to whatever return you tell them you need. So I think that's hopefully answers your question there. Let's see, I've got a few questions here. John Allen Jr. It's funny, we have a John Allen on our storage team. I don't think he has a son, but that's funny. Do you often reach out to brokers first for pricing guidance on deals that meet your investment criteria before jumping into underwriting, or vice versa? I'd say it's ideal to get pricing guidance first, because sometimes that's helpful as kind of a gut check. If you are underwriting every deal in your market and a new deal comes out, and they want 50,000 a door more than everything else you've seen, that's typically a helpful guideline to say maybe you don't spend as much time on this deal. So ideally, we're getting pricing guidance first before jumping into underwriting, but I'd say that kind of fluctuates on a case-by-case basis. If there is a deal that comes out that is right in your criteria and they have financials, and it's a really good quality asset, and you don't have pricing guidance yet, so we'll jump into underwriting and just start with the deal, and then eventually in the next couple hours get some pricing guidance. Kenneth is asking, how do you build a relationship with a broker when you've never closed a deal with them? Yeah, that's a great point. So again, the PDF we found to be super helpful. Doesn't necessarily need to include a current portfolio. If you don't have a current portfolio, I would definitely include other if you have done deals with other brokers, include those deals. We have a page and a half full of references from the major shops in the Southeast, and it's all different kinds of brokerages. So if we're sending it to Northmark, there's going to be their competitor's face on there saying that we're a great group to work with. So that helps with the familiarity. So I'd say that that's one thing. You don't necessarily have to include that stuff in the PDF, but any kind of meaningful professional experience that you've had would be helpful. Understanding your criteria really well, being educated about the space. And that first phone call with a broker, they're going to be able to tell if you've put in the work to understand the business, understand what you're looking for. It's a very quick sniff test. So I'd say being educated is one of the easiest ways to do that. And as a younger person, I remember I've done some smaller deals around Charlotte. I remember thinking about, well, what about my age? I'm in my early 20s. Like these brokers are not going to take me seriously. But it quickly becomes null and void after you have a couple phone conversations and they realize that you know what you're talking about, you know what you're looking for, and they could care less if they're closing a deal. So I'd say also letting those kind of limiting beliefs go out the door and realize that everyone's just looking to get deals done. No one cares about your specific scenario, really. So hopefully that answers part of that question. And I'm trying to think of anything else if you haven't closed a deal with them. Again, the quick feedback, the consistent communication with them. I mean, eventually, if they know that you're underwriting every deal they come out with, and maybe you come in, you kind of have to get some wounds a little bit. You come in second, you come in third, you come in fourth a couple times, you miss out on some deals. After a few months of that, those guys are really going to be like, okay, this guy isn't going away. He's a real player, and just make sure that you're a real player. So Alan is saying, it looks like we lost audio. Can everybody hear me? If somebody could put down in the chat, that would be helpful. Okay, so we do have audio. All right, Alan, might be on your end then. I'm seeing a lot of yeses on the audio side. Let me know if we can help. Okay, you said all good now. Perfect. So any other, let's see. I'm missing anything in the Q&A. Got a couple more minutes here. Probably going to run this until about 25, 26, unless there are no questions, and we can start wrapping up. Tony says, how do you educate yourselves to prepare for those broker calls? Yeah, I'd say listening to podcasts, listening to webinars like these, reading a lot of books is how I got started. So I'd say reading books, listening to podcasts, listening to webinars like these, joining meetup groups in your market is another great way. So there's events here in Charlotte that I would go to and kind of just introduce myself, meet the kind of players in the market, hear what are the good areas, what are the bad areas. So a lot of those meetup groups will happen, after work, once or twice a week, and just kind of going there and meeting people that way. But it takes time. People want to, they hear about, you can get rich in multifamily, and then, they want to buy their deal in the first 6 months. I started learning about multifamily real estate in 2017 when I was in college. I then worked a job in property management in Philadelphia, and then worked at a student housing investor during college for another 1.5 years. During that whole time, constantly educating myself, reading books, listening to podcasts, going to meetup groups, talking to other investors, and then eventually bought my first deal in 2020. And so that was 3 years actually after I was learning. I don't think it needs to take you 3 years. I was just, a broke college student and was learning about the whole space. But, I think it definitely needs to be a good amount of time to get yourself educated and doing that. One thing you could do is, if you want to learn a little bit quicker and kind of throw yourselves in the fire, maybe call some brokers that are outside of your market and just, talk to them like you were a prospective, buyer, and try to understand what kind of questions they ask and that kind of thing. Maybe that's a little bit, not super ethical, because maybe you're not a serious buyer, but that could, help you get thrown in the fire a little bit. Ted says, we've underwrote lots of deals with nothing penciling close enough for an LOI. Does that make us look bad? No, I don't think so. We are running into that a lot in this current market. I think being able to back up, why you're underwriting that way. And we have a lot of conversations. We never will send our underwriting to a broker, but we will answer questions about what are our assumptions, like what's our exit cap rate, what kind of upside on rents are we seeing, what kind of insurance are we underwriting per unit. So I think, and even asking the broker, like, hey, what am I missing here? Like, how are groups underwriting this differently than I am? Where do you think I'm off? That kind of thing may be helpful if you have a good relationship with that broker. Let me just check the Q&A and then we'll wrap up. You guys start by buying a little bit older product like 70s so you can close deals, and then moved into new product like 80s. Yeah, so we started in 70s assets in South Carolina. We then transitioned into the Class A space, so that's really 2010 and newer. And a lot of the deals we buy now are directly from developers, but definitely started in the 70s vintage. I don't think that, you need to do that to show you can close deals. There's a lot of build to rent stuff out there that are smaller deal sizes, that are new builds that you can get done. So I think it's maybe more of a function of smaller purchase price that is really the basis of that question. And I don't think you need to start with older product to prove you can close deals, as long as you can find good deals and close a small newer deal. I think that's definitely doable. Specific podcast books you recommend? Well, I of course have to recommend the Dan show, the Multifamily Investor Nation podcast that I think Rob is heading up now. He was doing like 25 interviews at our conference here in Charlotte, so there should be a lot of content coming out there. Books. So the first book I ever read was The Millionaire Real Estate Investor by Gary Keller. And that was a great book to kind of understand how wealth is built in real estate, and how that all looks from a like an actionable perspective, how people have done it in the past. So I'd start with that one. I mean, there's a ton out there. Maybe I can put down in the chat when I kind of come up with some other ones, but I'd say start with that Millionaire Real Estate Investor book. That's a great start to kind of understand how wealth is built, the different strategies to build wealth, and that kind of thing. So I think that's all of the questions. So thank you everybody for joining today. I hope it was helpful. Always available to answer questions or talk, more specifically to anyone's situation. My email is eric@passiveinvesting.com. That's ERIC@passiveinvesting.com. Hope everyone has a great day, and thank everybody for joining. Appreciate it.